Everybody, how's it going? How's it going? Welcome to the channel. Welcome to the show. Donald, Don, Wade, Sergio, Dan, Ivan, Ryan, Craig, Steven, Rex, Don, David, Kevin. Good to see everybody. Maurizio, Steven, Andreas, Rosalind. How's New York City these days? Darren, Svenborn, how's Iceland? And Kay, Don, Ted. Welcome to the show, everybody. And I've got another juicy bonus trade coming up. Anthony, Gayton, Amy, Bob, Don, Alan, Tara, Roland, Helen, Cliff, Gary. Welcome to the show. Welcome to the show. And the BLS. Imagine this. Imagine this. I said the numbers were all made up, right? Guess what? We revised them down. Almost 1 million jobs for the last 12 months. Is that indicative that we've been in a jobs recession? 1 million of these so-called created jobs gave up the ghost yesterday in a very unprofessional, kind of messed up way. It's like, hey, we're showing our incompetence, and the numbers were supposed to release at 10:30. You may have thought they did because the bots went crazy, but they were just volatility sparking bots. It kind of showed the market's true colors. The numbers never came out. Well, they didn't come out at 10, right on the money. And the bots went crazy, pushed price all over the place. And then sometime later, we found out that there was 818,000 jobs that we just struck out. Revised the list down. 818,000 jobs. I mean, that's just crazy. Just crazy. Right here. I'll show you look at this. Look at that. The second biggest negative payroll revision on record. Accidentally, we overestimated by 818,000 jobs. No big deal. Right? No big deal. Just happened to be during an election year. Maybe we overestimated last year. We way overestimated this year. And, just it's like incompetence on top of incompetence. They failed to release their numbers at the correct time. They had a failure. I kind of saw some of this coming through on X. I was like, what the devil's going on? And then they released the real numbers, or the revised numbers right there. So I mean, there goes all Biden's jobs, right? I don't know. Whatever. I mean, it's all made up. As long as you operate with that kind of principle that those numbers are all made up, they don't really mean anything. This is hey, whatever. I don't even know what to say. Like, I just good grief. Oh, good grief, right? I mean, if you don't laugh about it, what are you going to do? What are you going to do? No, anyway, I do have a bonus trade coming up at the end. Stick around. And I think it's just, it was amusing that they failed to release the numbers that were stressing that they failed to estimate the numbers properly. So it's like we had incompetence releasing the numbers that showed our incompetence. I mean, what do you expect from I mean, just whatever. Is if you don't laugh about it, what are you gonna do? Cry? I mean, it's serious, I guess. And then the lady on CNBC last night, the head of economic whatever, didn't even know the Bureau of Labor Statistics existed or whatever. That was just amusing too. If you didn't see that, anyway. I don't know. All trading involves a substantial risk of loss, right? Past performance, not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to buy or sell any financial instrument. So that means no stocks, options, bonds, forex, futures, cryptos, treasuries, stuff from gurus. Don't long them, don't short them, don't trade them, don't buy them. Don't do stuff, all right? Don't. If you're not sure what you're doing, paper trade. For gosh sakes, I've been on this rant for a couple days now. If you desire personal personal financial advice, you need advice on what to do. Just tell me what to buy. Sorry, it's not what I do. All right, I, I don't have the certification. I don't know your financial situation. You may not be in the same boat that I'm in. You certainly don't have the same life experience I have. If you need help, you got to hire and consult a financial advisor that has a fiduciary duty to give you advice based on your financial situation, which is not me. All right. I'm an entertainer on YouTube. That's what you're watching on YouTube. It's entertainment. You may not feel like it's entertainment, but I compete for your clicks and your eyeballs just like everything else. CNBC's entertainment. You may feel like it's the news. The news decided they're entertainment. That's why all the stories are negative. Humans love negative stories. That brings more eyeballs. I try to stay out of the negative. I try to give you the truth. Best I know it. Best I can figure it out. I spend a lot of my day trying to red team the truth. Figure it out. So the Jackson Hole Symposium starts today. Today is the day. Dun, 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 dun. Right there, the 22nd. We have this Jackson Hole Symposium thing kicking off. Day 1. Right here. Shouldn't really be much to it. All right, we do have, we have normal unemployment claims. We get the flash services and flash manufacturing. Those don't tend to be big market movers for the actual market. I mean, we may see a little volatility at 9:45, right while I'm live. We may see, some jumping around, but that's still in amateur hour, that first hour of the market day. So we may just see some extra volatility in the charts, but I don't expect much there. Tomorrow, dun, 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 the thing that might matter right here, along with this right there, those two items might matter tomorrow. And then Jackson Hole Symposium wraps up on Saturday. I mean, tomorrow. Yeah, tomorrow. Gosh, it's Friday already. Oh, where'd this week go? Kimberly's here, my favorite subscriber. Yeah, infotainment, I guess. I give you information and entertainment. So, infotainment. Don, I don't disagree. There should be. I think that I'd love to have 500,000 people watch me every day like Jim Cramer, but it's just not the reality of my situation right now. Only like 200 to 400 of you regularly watch me. So tell your friends. Like and subscribe. That's why I always say that stuff. I only regularly get about 200 to 400 people each day. Over the course of a month, I get about 3,000 people. Over the course of 3 months, I get about 10,000 people come see me. Still not very many people that I'm helping. And all honesty, I'm not supposed to tell you this number. I've only ever, people wonder how many people have bought something. There's only been 6,000 people ever buy anything from me. It seems like it's a lot, but that's not. I mean, in the industry I'm in, like the market wise people that do this as a public company, they have something like 3 million, or I don't even know. They have 1 million customers. They have 1 million paying customers. 1 million paying customers. 1 million people buy from those. That's like Stansberry Research and those type people. I don't know. You got me. I'm out here trying to give you the truth. Now the difference is, I don't sit here and beat the drum and say, hey, tell you what to do, be an investor. I don't consider myself an investor. I consider myself a trader. Now I do some investments, but Kramer has 500,000 viewers a day. Then he's got however many people buy his trading club thing, and it's just, I don't know. There we are. Look, on the path. I told you yesterday, once we got above here, we're on the path. Probably going to go cruising right up here. That's the path we're on right there. And like I talked about when we got here a couple days ago, we may do this, and this. That may be the actual path that we follow. Maybe I get lucky. Sometimes I get lucky. Maybe, I think 77% of the time or so, we're, likely to do one of those two right there. Yeah, I mean, everything could affect this, Dawn. I mean, everything could affect anything, but what's really going to happen? A supply chain disruption, probably, I don't know. We've got 900 other ways to fix things. Maybe that affects the stuff that was on that train, or maybe it, maybe it lasts longer and actually turns into something more meaningful. Maybe. I don't know. Anyway, it's hard to account for all the maybes. ES, rocking and rolling so far. If we look down on the 15 minutes, it's kind of where we've been. Look, bounce. That was a volatile bounce yesterday. That's that BLS shenanigans right there. That's what I was talking about. If you weren't aware, people were like, "Why is the market dropping? Why is the market popping?" It was bots. They didn't release the news until over here. That was. If you don't think this thing, I mean, look at that. That was all. This was all bots. All bots right there, because the numbers didn't come out until almost noon. They didn't get their crap together and get it fixed and posted. That was all trading bots. Isn't that crazy to think of? Like, it kind of showed the true colors. Like, that some of these news releases, the bots aren't reacting to the news releases. They're trying to create volatility and make other bots react. And then, this game, if you ever, it shows the true colors of this game right here. That, since the actual news didn't hit right there, and it shows you what shenanigans go on. I mean, look how many points that was. Look at that move. I mean, that was a serious move, too. 41 points? 41 points just from bots, from news that was supposed to get posted that didn't actually get posted. You think the market moves by news? That just kind of proves my point right there. I mean, welcome to JT's show. So, if you needed any proof, there was some of the proof. The news doesn't matter because the news didn't even happen. Anyway, I digress. Thanks for coming, everybody. Thanks for being here. Thanks for supporting me. If anything I say is helpful, beneficial, something you learned today, give me a thumbs up, give me a subscribe, give me a like, hit the bell for the notifications. Make sure you're on there. Put an alert in your phone. I go live like this every morning, 9:15. Cover stuff like this. Cover the shenanigans in the markets. Try to give you a leg up. Attempt, anyway. It's not always easy. I'm here. I'm just a guy. I mean, just a guy with some charts, trying to do right by you. I've learned a few things and just trying to share what I learned. So, Wronger's here. Hey, buddy. Glad to see you. Get some cars fixed. Anyway. So it looks like we're on the path. Moving away right there. Looking at the other futures. NQ. Moving on up. Looks pretty good. I don't know if you can hear that. I'm getting alerts like crazy here. And, well, thank you, Douglas. I'm just a guy, though. Like, I can be wrong. I probably will be wrong. I mean, golly, what the devil? We got a lot of alerts going off. I want to show off this real quick. I got this thing coming up next week. We're going to release this baby. Oh, that was 3 of the things right there. Those 3 trades just closed out. So this looks a lot like Apollo if you're in Apollo, but it's not Apollo. It's called the triple threat trader. This is a 1 minute. These are day trades. They usually last about 45 minutes on average. And here's the list for the last 2 weeks right there. We've had 65 trades in the last 7 days. If you think that's just kind of crazy, right? 55 of those were wins, 10 were losses. That's an 84% win rate in the last week. That's 7 days. 65 trades in the last 7 days. 324 trades right there since July 10th. So 40 days, we've had 324 trades. That's pretty wild right there with a 79% win rate. That's just last 2 weeks right there. Check out the last 10 days or so. We've had 10 days. Check out the last 21st, 20th, and the 19th. Since the 19th, right? Where is it? Right there. Right there. Coming across, we've had 1 loss, 2 losses since the 19th. The last 3 trading days. Isn't that nuts? I think it's nuts. Absolutely nuts. My man in Discord saying that he doubled an account in the last 3 weeks using this. Mostly using this. Ben, good job. Great job, Ben. I mean, just unbelievable. So this is the kind of stuff I've been working on in the background. We're going to release this to the public next week if you want a piece of this. If you're in Termire Trading Lab, you've had this since we set it up on July 10th. And welcome to the show. Yeah, Patrick Sledge has been trading the crap out of this. Laura's been trading this quite a bit too. So they've been testing it out. It's fast. You got to be there. You got to pay attention. This is not for I'm working and I'm doing something else. You're glued to the screen because these go fast. These go really fast. I just want to show that off real quick that we're gonna make that available next week. Stay tuned on Monday. So if you see something from me, that's what we're talking about. Triple threat trader right there. It just works. It doesn't care. Like it made a bunch of successful trades when the market was getting slammed 2 weeks ago on Monday. It just freaking works. Just freaking works. And it does suggest an option. It automatically suggests, I can show you alert real quick. Hold on. Give me 1 second. Pull up let me show you what this baby does. Oh, cool. That's why. Let me grab one of the alerts with the screenshot. Check this out. It looks very when you see that track record, you think it looks similar to Apollo, but when you see the alerts, this is what the alert looks like. Similar, but not even like the same as Apollo. Right there. This was from the 19th right here. See, it tells you what we're looking for. That's a 0.29 move versus a 1.45 risk. And it suggests an option right here. Right there. That you can play it. So they're to get big gains, you got to play options, and they're fast. They're 0 days. These are 0 DTE. See, that's the 19th. That's 19th. Not everybody can play day trades. Kathy has been crushing it. She's got a cash account, $1,000 account. She's trading these right there. She opened a brand new cash account with $1,000, and she said she's been absolutely crushing it. She's able to get 3 trades a day, I think she said. And then she has to wait a day for the cash funds to settle so she can trade every 2 days or something like that. So if you're like, well, you can't day trade. Well, you can day trade in a small cash account. Absolutely. And then a lot of those are like $100 or less for the 0 days. So it's day trading is what it is. That's the big difference. This is absolutely day trading. They're all day trades. Very rarely you hold any overnight. And most of the traders trading this don't hold them overnight. And they take extreme focus. So there's a huge difference. Because you can go from a winner to a loser if you don't close it when the close comes out. And you've got seconds to react. It is fast-paced. Anyway, oil. Breaking down. Watch out. Dun, 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 dun. Are we going to dip down here? May very well happen. Watch. Or it could be a fake out and we go ripping. This is one to keep an eye on right there for oil. GC. Still chugging up here. Getting a little pullback today. Not great for the weekly gold trade, but it's still an inside candle so far. What does that mean? What does that mean? Look. Inside. It's inside the range of yesterday. We tried to poke out, but basically inside the range of yesterday. If we break down below this low, probably not good for going on higher, but there you go. Anything can happen, though. This could just turn and burn, and we could be up here at the extension target pretty darn easily. This could be a dip and rip, too. We could dip down to the breakout. Very classic that we hit the 1272. Very classic. We do this, hit the 1272, right where we stopped. We retrace back to the 100, and then we go right up there. Very classic. I mean, that's, gosh. When it does go up to the 1618, it happens. It does that more, more than 50% of the time. It'll do that right there. So that's what to keep an eye on for gold. Bitcoin, struggling. It got through the futures, but still struggling on the spot. Came up nice and strong yesterday. Little retrace overnight, and we're just hovering. If we can push through, got that alert right up there. Looks good for going at least back to the downtrend line. If we can break through that and that 618's right there, break for that and that, it's kind of a confirmation. We're ready to start moving. But this may go through another consolidation again and not actually find a bottom until October. All right, it may take till October before we actually start this ascent and we actually break out higher late November. So that's kind of the time frame we got going. Usually it takes about 220 days post halving to work through whatever consolidation and bum enough people out that that the market can actually rip. It's just human psychology. It's the way it works. That's the way it works. ETH/USD still looking marginal. Wow, that is being slow. What the devil? So, that still looks like consolidation. Still looks like we might get further. Golly, orange always does that to me. I don't know what I guess it's that citrus, orange peel, whatever they put in there. Always does that. Oh, I just made money on FedEx. I don't even remember what trade I had on FedEx, but I just made money on FedEx. So, dollar. Look at that. Look how fast it's going. We're right down to the prior low here. We break through it. Next one down. We break through it. Going down to the mid-90s. This can flush pretty quickly. Right there. Japanese futures. Going for the prior high right there. I don't even know what this is. Let's look at the statistics on this baby. Not the most reliable. Not the most reliable. And it didn't fire off an entry. Interesting. So that right there, potentially setting up a trade to 44,000 on NKD. That's the Japanese futures. You'd be like, well, how do you trade that? That's futures, baby. Go trade your futures. I've never traded NKD, so I'm not gonna go into how to trade it. I've just been watching it because it was widely publicized as the reason for the U.S. market pullback. If you didn't know, the carry trade kind of blowing up. So, and it's my 5-minute trade on gold, kicking off, and S&PS. Look at that baby. So what's moving today? That's what we're going to go through. We're going to look for 2 major patterns. And if you're new here, pattern number 1 is the market roadmap bounce. And That's what the orange line is. You've already seen me talking about these patterns already. So in the description, there's a $5 thing, market roadmap. You can buy that. You get a masterclass, tells you how to work the pattern. You get the indicator, an easy button. You just click it and put it on your chart. If you're more of a DIYer, you can just click the YouTube homepage. For me, my channel homepage, and it's like my favorite indicator and some arrows, and it's like you can see the orange line going through, and I give you the code and kind of a little class on how it works. Very, very brief class on how it works. And so if you're a DIYer, you can do it that way. You can just put those EMAs in any platform. It's the 144 and 169 EMAs. It's not really secret because I give it away right there on YouTube. And so that's what I do, providing value. But basically, this is a support resistance line. Why? Who cares? Who cares the why? Go get the masterclass if you want to know the why. But it works, it bounces, and it produces a high probability trade. So trade number one, let's pull this off really quickly. We have a roadmap line. We're either looking for where we bust up and we retrace to it, hold it, and then we move away. That's trade number one for the roadmap line. Trade number two for the roadmap line. We got this downtrend going over here. We're coming down. We bounce up to it, and then we get continuation lower, like that. So that's the two trades that I'm kind of looking for possible for the roadmap line. And then we have another one that I'll refer to if I see it, called the measured bounce. Looks very similar. I like reversal trade. I like trend, pullback, continuation trades. I mean, that's kind of what I do. All right. If you're new here, that's what I do. So this one, let's change this just a little bit. Make this a little longer. Put it down in the middle of the screen. So we get a trend. We've got like a downtrend cooking. We get a new trend potentially. Like looks like a correction, right? Starts correcting the downtrend. We're moving a new way. Then, we do this. And when we throw the fibs on there, if we stop at the 618 right here, that's what I'm looking for. All right, we've got a trend, got a pullback, and looks like we're going back into trend, but we stop right there at the 618, and then we do this, potentially. Like that, this pattern doesn't work out as often as the roadmap line pattern. The market roadmap pattern works out like 75% of the time on average across all tickers, all time frames. This one doesn't work out that often. All right, it's more like maybe a 60-40 or something like that. Maybe 55-45. So a little less awesome, but this one has bigger gains, much bigger gains potentially than the market roadmap. So I like this one, especially when they set up on like a weekly chart. So I'm watching for that one. So that's the two main patterns I look for every day. Come up here, and you may be like, well, what the devil pattern is this, right? Which one of those patterns? Well, let's hold on a second. We've got the high, we've got the low. That's the roadmap bounce. It's just might not be a daily chart. It's not a weekly chart. It might be a 3-day chart. Oh, it is a 3-day chart. Look at that 3-day chart right there. Boom. Maybe like, well, you can change it to any time frame. Yeah, you could. They don't always hit right there, but that is a 3-day, probably going on up there to 657. Could take a little while to get there. This is not the bonus trade. This is just looking at the market. Every morning I pull in the pre-market, I pull everything that's moving $2 or more, up or down. If it's up, gainers list. If it's down, decliners list. And it's funny enough, like something like 90% of the tickers that I put on the gainers list end up green for the day. And 90% of the tickers I put on the decliners list end up red for the day. Even if they start retracing during the morning show and, aren't the awesome gainers or decliners, by the end of the day, they tend to end up either a gainer or decliner just based on what they were in the pre-market. It's kind of funny that way. So anyway, that's where the list comes from. I make it at like right at 9 o'clock. So if something starts moving after 9 o'clock before I go live or while I'm live, it doesn't show up. Like this list doesn't get refreshed. Just throwing that out there. Alrighty. SMCI. Consolidating. We hold below the resistance at the roadmap line. That's that pattern I just went over, right? We broke below in a downtrend. We retrace to it. And then we get continuation down. That's what I would expect on SMCI. Sometimes I get lucky, and this is a giant bubble pattern. If you're unfamiliar, look at that. We find these all the time in the market. We get this extreme optimism, euphoria. Everybody's going to be rich. I'm a genius. Everybody should buy NVIDIA and SMCI. You're all going to be rich. And then we get into some complacency. We just got to cool off before we can go on to the next run. And then watch out. Watch out. That's that'd be a bummer. And that's kind of what we have going on right here. See the excitement? Extreme excitement. There was no reason for this thing to be $1,200 a share. Cooling off. Everybody kind of talking about, we just need to cool off. We can go on another run. AI is still hot. Now we're starting to bum people out. We may get another little consolidation and then end up right there. And this could take way longer than you can stay solvent. This might take into 25, 26. May take a while to get back down there. And it may go much deeper than just right there. It could go all the way back down. Be careful. AVGO. Market roadmap bounce. Probably on the path. 194. GDC. Wow. That looks like a nasty chart. Why would it break out? It's probably doing another one of these. Watch for the lower high and return back to nothing. Flutter Entertainment. That was support. We came up just shy of it twice. Now we're probably heading on up to 234. That's a roadmap bounce. It just is very sloppy. Like they're not always clean cut and clear. And I tend to stay away from the ones that are sloppy. But that's probably set to go higher. We're kind of struggling with this gap fill. That's what the orange box is. This gap down right here. Struggling to get through that. We tested it once, tested it again. If we can get above it, we're probably coming up here to 234, but it could be a rejection and we could go lower low. That's why it's just not as awesome for me. I'm not trading that one. RZLV. Wow, look at that freaking chaos, man. They were just kind of humming along and then that's like the heavy metal started or something like that. There's no trade there for me. EL Estee Lauder, working on finding support at the target. Look, that was the upside down one right there, right to the target. Right to the target. Holding. Now, if we, just like I was talking about on some of the other tickers, like gold, if we retrace back to the 100, we may do an extension right there. Same patterns upside down. Like this is the same patterns. The market does the same patterns on the upside and the downside right there. Same exact patterns up, same exact patterns down. NVDU, this is caution. Leverage stuff, leverage stuff, leverage stuff. When you see a 2X, a 3X, an ultra, something like that in here, be careful. They don't always follow my patterns, but this has closed above here and set the stage for a rally up here, but it may fail and go lower low. All right, this could be a fake out on NVIDIA. I'm highly suspect. I'm not trading it. That target would be right down here because that's a measured bounce. It's, this is a market roadmap bounce. Tends to work out more often than the measured bounce, but this is a measured bounce. It may end up down here with the continuation. So it's at odds with each other right there. Be very, very careful. It has that little gap in there too. You were stuck right in the gap down. Right there. A-I-R-I, air. Aerospace and defense. Aerospace and defense. That is a reverse split. This is a dumpster fire. This is a dumpster fire. Yep. Look at those reverse splits in there. Look at that. Oh my goodness. This is a dumpster fire. Stay away from it. Probably going to keep going to zero. Why do I say it's a dumpster fire? Reverse splits aren't bullish. All right. When you collapse your stock, it's not bullish. I don't care what kind of pops volatility comes from over here. This thing has collapsed several times. An insane multiplier on this thing and probably going to zero eventually. GHSI. Another one. Another dumpster fire. STAF. Another one. Another dumpster fire. If they got these reverse splits in here, just don't trade them. Just you're setting yourself up to lose a bunch of money if you do. When the chart looks like this and it has reverse splits, that's what I call a dumpster fire. You're playing with fire right there. I mean, you can just do a high probability thing. Like if you want to day trade, come do this. If you want to mess around and lose a bunch of money, screw around with these right here. AIRI, GHSI, STAF. Now, Pinduoduo, this is Temu. If you didn't know what the company behind Temu was, here you go, Pinduoduo. They're set to rally on up to 172. I'm not taking this trade because China stuff is one of the things that screws me. There's 4 things that kind of mess me up sometimes. Low price stuff under $10, which, right there, staff and AIRI, both under $10, may not follow the patterns. Leverage stuff, things with the 2x, 3x, like MVDU, don't always follow the patterns. China stuff, Pinduoduo, Baba, Baidu, Luckin Coffee, Puda Coal, you name it. If you're in China, don't always follow the patterns. And the fourth thing is biotech stuff. Like anything the Food and Drug Administration of the United States gets involved in, that tends to be the kind of news that can move a stock unexpectedly. Drug approvals, denials. They work on a drug for years, and then all of a sudden, hey, we don't think it's going to work, and we're never going to approve it. And then all of a sudden, the stock goes to zero. And it works for medical specialties and pharmaceuticals and all those sort of things. Anything the FDA is involved in, it's the government, right? So watch out for those 4 things. They commonly don't always follow the patterns. Now, this one has shown the ability to do this pattern quite often. So all that said, 100% of the time, this is set up. 5 total examples in the past. It's worked out to go right on up to the extension target. Now, this one took too long, so it didn't fire off the algorithm. But it might work out. It might. Now, what was declining? Williams-Sonoma. Back to the roadmap line. Here's an opportunity, potentially, in the future. Stock splits have not been very bullish recently. Like, pretty much everything that's gotten a stock split recently has been getting whacked after it did a stock split. And this could be the bottom, and we could go ripping off to 182. I'm not convinced, but we'll see what happens. And, I mean, like AVGO, another example. Did a split, got whacked, came down, made a low. Now we're potentially breaking out. NVIDIA did a split, got whacked, found a bottom. Now potentially going to go higher again. CMG did a giant split, 50 for 1. Epically large split. And looks like that one got below the roadmap line and may go an extension lower down here. So these are, even SMCI. That one's set for a split, I do believe. Don't. MSTR. This one did a split just recently and just kind of farting around. not really getting off the mat. So watch out for stock splits. They can move the market. Not always in a good way. Snow, retrace. Oh, look at that. I think it was just yesterday I said I need a 618 retrace. Looky, looky, looky. Sometimes the market gives you what you want. I'm not buying on a red candle unless we hit and start turning. Like if this is a doji by the end of the day, I may buy. If we dip down here and touch and pop back up, we're still shy of actually hitting the 618. If we do that, I may buy more than my one share. I've got one share that I bought down here. May add to my one share. I may have 2 shares, maybe even 3 shares. I don't have a lot of free capital right now because I got margin called 2 weeks ago in the big murderization of the market. And I got forced closed and took a loss and then margin called, and it was a big pain in the butt. And I'm still working through that. So I can't allocate tons of money to this. Maybe I can in a retirement account, but one of the IRAs. Look at this to break out, but we've got to break through the roadmap line first. For those of you who are new here, I put this target down here. Gosh, when did I do that? Like almost 2 years ago, I think. I said we need to make a lower low. And we kept proving we need to make a lower low and proving it. And even when we were up here, I said, well, it's going to make a lower low. And then, boom, right down there. So, watch out for that. Could make a lower low still. I need it to hold that 618 turn, break above the roadmap line, break above the downtrend of lows, or uptrend of lows, excuse me, break back above that line right there. And then we can get rocking and rolling. And this could be an epic run. We could be talking about $1,000, $2,000 a share up here. I believe in their technology. It's where this fundamentals don't always move the market. All right, don't move the chart. This was all corrective. This may be the bottom, but I'm not convinced yet. May still go lower. Something like 95% of IPOs start out in a bearish corrective manner and make a lower low before they can clear out the chart that we can't see. So they're all correcting stuff we can't see, and this may be the lowest low. This may be the correction is done. I don't know because we don't have the chart that happened before they went public. Another prime example. This started out, and this was all corrective action, and now we're hunting a bottom. Now, it may go out of business before it finds the bottom, but that's classic. Classic right there. That was corrective, even though it's like, no, that was bullish. No, that was all corrective. It was just correcting what happened before it. We can't see that. We don't know the valuation. Now it's work on the correction. Now, the problem is we can't run the fib until what the next move may be, until we start getting a reversal and a breakout and whatever. And you may be like, well, that company's trash and should go out of business anyway, because who wants to eat plant meat? Doesn't matter. Doesn't matter what you think. All right. When you can put the news and your thoughts and your emotions to the side and just trade the chart, you're going to do way better. A hunt for October. Yeah, hunt for October. A hunt for opportunities all over the market every day. Look at hundreds, if not thousands of charts, and try to find the opportunities. This one looks like it's the opportunity to go lower low, and I would expect it to make a lower low before this sets up a reversal. Netflix did the market roadmap bounce, and we're almost to the target. So be careful there. Target's 716, 732, maybe up to 779, but that's a stretch. This is like 75% likely. This one's like 70% likely. This is like 30% likely, maybe 30 to 40% likely that we just make a rip right up there without getting some sort of bigger pullback, like one of these. All right. Be careful. FNGU. Yeah, or paper trade. Yeah. Paper trade. It's always good. FNGU leverage stuff on big tech. If this thing can beat the gap downs, these 2 gap downs, we're probably cruising on up to 627. RH. There's a choppy sideways. No trend. No nothing for years. A lot of volatility, but nothing happening. BJ's Warehouse, wholesale. Did the roadmap bounce? Potentially. That high, that low. Break above that. Game on, going higher. 94, 95. Pretty solid. Urban. Oh. So look right here. We did the bounce right up. Just missed the target at 49. Right down to the roadmap line. And going lower. This could be another bounce on a higher time frame. Not so sure. That was a nice move up. Nice move up. May need a retrace right down in here. We may be doing the bigger picture measured bounce. If we do, that'd be an opportunity because that thing may rocket higher. This move up. This retrace. Watch this. Watch these ridiculous numbers. Could go from 27 to 73, 96. That'd be like almost a 4xer. 136. That's definitely a 4x, almost a 5x right there. That opportunity. That's why I like measured bounces. If we can do it, possibly 403%. Dang, little. I don't know where these little fruit flies. They continue being in here. There is nothing in here food wise. These monster cans are like not something that fruit flies can eat. There's no, like, there's nothing. I don't eat in here. I don't know. I don't know where this little guy came from. He just keeps hanging out in here every day. I don't know. Flew up my nose and then graced right through the little bit of hair I got left on my head. Anyway, NTES going for the target. Come on. Came up shy right there. Retraced up. Resistance. Kind of set up a measured bounce. Going to the downside. May flush even a little lower down to 67. Charles Schwab. Guess the acquisition of TD Ameritrade, not the bullish move they were going for so far. Didn't do all the bullish stuff yet. Just, that's all overlapping. So what we've done, see this high over here, this low right here. See how they overlap in this area? That's not bullish, all right? So now the potential we have here is kind of a lot like snow. This setup, we've made the initial move down right here. This was the first move. We've done this chaotic retrace. That's the second move. That would be the third move. Now, how big would that be? Go like this. This is the easy way to do it. You just draw a line, pull it over here. Potential to go down to 38 right here. You can do it with fibs. Click the high, click the low, click the high. There you go. It's not magic, it's just math and patterns. This whole thing that I do is just pattern recognition. It's not even really math necessarily, it's just pattern recognition. Right here, you recognize the patterns. I use a few tools, fib tools, to find the patterns and recognize the patterns and compare the prior patterns to the current patterns. The market does the same patterns over and over, so you just got to figure out which pattern is the current pattern. And more often than not, I get lucky, and sometimes I get lucky. That's why you're here, right? And then up there, TD. Funny enough, those two back to back, Schwab and TD. That's just funny. And pulled the US version. A little bit of trouble breaking through the roadmap line. This may, in fact, be set up for continuation lower, down to 52, possibly 51, right there. And my bonus trade for the day, BWXT, is the one I picked. Check this out. This high, this low, close above the 618, right here. This is fresh entry today. Target right up there. Maybe like, well, hey, JT, what kind of statistics you got on this one? And I'm glad you asked. Let me pull that up and show you right here. Right here. So check it out. New potential entry. Yesterday's close left a profit potential of $8 on the upside right there. 92.86% win rate. That's pretty smoking with a profit factor of 16.1, basically 16.2. I mean, are you kidding me right now? The wins are giant compared to the losses. Maybe the one loss. It's done 14 trades since 2010. They usually last about 32 trading days. Maybe like, well, how long is 32 trading days? And I'm glad you asked. Today is day 1, 32. Oop, drew that too far because that stupid little thing got in my way. 32 bars. You got to go with bars right there, not the D. This is 32 trading days. Bars are trading days on a daily chart. You need 32 bars for 32 trading days, which ends up being 47 calendar days. So if you're buying options or something like that, trying to take advantage of this, you need at least 2 months, if not a little more, maybe 3 months, maybe out to January, maybe December. All right? I don't know what options may exist or may not exist, or there may be no options exist on this thing. I didn't look that up. I just looked at the high probability setup, and that's the kind of juicy stuff I love. You may be like, well, that looks like an Apollo trade. It is not an Apollo trade. This is something else based on the daily chart right there. Welcome to the show. All right. The Apollo algorithm on a daily chart did get long right there. Look, it's based on Apollo. It's just not an Apollo trade. Yeah, 92% win rate, 14. Pretty smoking. Pretty smoking. There's the potential. Right up in there. All right. Let me know in the chat if you like the bonus trades. You think they're helpful, beneficial, all that stuff. Bonus trade, bonus trade. I should probably pop that up before I do that. Anyway, bias for the day. Bias for today. Ooh, getting a little retrace. We may, I don't know. I think we're still set to do that. High probability. You can see on the Apollo took the long right there. 70% likely. Getting the extension on the SPX chart. Go to the SPY chart. Took the trade. 65% likely. SPXL. 74% likely. TQQQ. Look at this baby. 94% likely. Pretty likely we're going to go on up to the extensions. XLY. Pretty likely we're going to go cruising on up to the extensions. 91% likely. These are all my things are saying we're probably going a little higher before we go lower, but everything can fail. Like, it doesn't have to follow any of those patterns. Doesn't have to, just because it worked in the past. You know, past performance not necessarily indicative of future results. Right there. I mean, say it at the beginning, say it again. Doesn't have to work out, but these are cool tools I built, and I'm trying to make it available for traders like you. So stay tuned for more. Make sure you subscribe. Make sure you give me a like, a thumbs up. If anything I said was beneficial, you like the bonus trade, you like the whatever it is you like that I said today, let me know in the chat. Leave me a comment if I'm no longer live and you can't chat on the live stream. And I'll see you again tomorrow. Same bat time, same bat channel, 9:15. I'll be live, going through the market once again. Have a great day. Remember, nobody cares about your money more than you. So you gotta protect what you got.